watching the market on ET Now. Well, I think let's zero in on the way the counter of ITC Limited is moving in trade today. Very interesting move, more than 6% of gains. This has been a stock that has been widely discussed in all social media forums. 230 rupees for this stock today. What exactly is propelling this kind of buying frenzy? My colleague Vinny Motiwala does some data crunching and number crunching on the counter. Vinny?
So obviously the much talked about stock is ITC even on social media platforms. So obviously the company has extended gains for more than 6%. That's the most that we've seen in the last 16 months. So that's around May 2020, and the company's stock price is currently trading at the highest since 9th of Feb. It's up 13%, YTD 31% in the last 1 year as well. Now, what is interesting is that what we could look out for is that recently we had a note coming in from CLSA as well, which said that they expect the FMCG business to grow, the EBITDA to grow at 31% CAGR. And if you look at ITC stock valuation, it seems like, they have ignored the multiple positive P's coming in from the FMCG business, and which is at a much of a discount compared to other FMCG stocks. When you look at the P valuations for ITC, it's much lower, like it's at 17 times FY22, while HUL is at 62 times, Imami is at 31 times, Nestle is at around 70 times. So surely, the valuations are very, very cheap compared to other FMCG companies, and maybe that is something that we should be watching out for as well, given that we are missing out on the FMCG valuations of ITC. So surely a strong move coming in the stock. There is also mature brands of theirs in the FMCG business like Ashirwad, Sunfeast, Yippee, which has a significant opportunity to grow as well. So surely maybe we are seeing something coming in over there. What is happening is something we'll keep an eye out on, but a strong move coming in ITC stock.
Vinny, thanks so much for that. Let's welcome on the show now Abneesh Roy to discuss a bit more on the counter and the move that we are seeing. Abneesh, hi, morning. You look at any metric, valuation, regulatory landscape, political landscape, ITC will dominate the chat because of the construct of the company. For very, very long, Abneesh, and I bet we've discussed this point with you as well for the longest time, that is that ITC's valuations are at extremely low levels compared to the FMCG peers. I understand that the valuation discount now is at a record high. But this is not the first time we've brought about the valuation story. ITC still continues to be at that cheap valuation. There must be some reason behind why investors are not ascribing the high value, despite the management coming time and again and saying that look at our FMCG business, look at it from a sum of the parts perspective. Today though, we are seeing a rally.
Yes, this is expected. 4-5 reasons. One is FY22 is likely to be a good year for their main business of cigarettes. This year in the budget, we did not see any cigarette tax hike. It was a good step by the government because it leads to higher share of the illegal. These kind of years, normally ITC stock does well because the cigarette business sees double-digit profit growth. The base is also favorable, given pandemic impacted last year more because of the strict lockdown. And now we are seeing offices and out-of-home travel come back very strongly, which is good for different businesses of ITC. For example, their hotel business, even cigarette consumption goes up when people travel and offices. So that again is good. Second is not just FMCG, even hotel, paper stocks, all these 3-4 sectors, the stocks have moved up 25-30% in the last 3 months. FMCG, all the heavyweights have moved up that much, and most stocks are near life high. ITC is number 2, number 3 player in each of these businesses. So definitely ITC would have got benefit if these businesses were separately listed. Management has been taking a lot of the feedback which investors have been giving. If you see this time in the presentation, they shared the numbers for the tech business, and the tech business is going to grow strongly given the overall sector is doing well, and company has seen a renewed aggression also there. The street is expecting that in the hotel business, there will be some kind of a value unlock, and in the recent AGM, management gave a very aggressive guidance in hotel business of doubling the rooms largely through the management tie-up, not through their own capex, which again is a very good step in the minds of investor, because then the return ratios are much better than investing on your own. A dividend yield of 5% again is good. So I will say this is more of a sector rotation, and within the sector rotation, ITC was perhaps the only consumption stock which had not gone up. If you see, normally when GST meeting comes, in the past we have seen the ITC stock has underperformed because there were concerns. Now with so many GST meetings happening, 34, 35 meetings where there's nothing happened on the cigarette business, I think investors are getting back the confidence that the more important thing to track for cigarette taxes is not GST meeting, but the budget. We think that the budget which will come out in February, we need to be very watchful there, because that would be 2 years anniversary of no tax hike in cigarettes. So I would expect that in the coming budget in February, which is still 5 months down the line, which is a long time for a stock. So I would expect the cigarette taxes to go up then. Quantum still remains it's not clear, but I think government should go for a moderate tax hike. That's good for government also, and illegal industry could reduce. So we have a target price of 241, and the way consumption is coming back, rural demand continues to do well. I would expect company to be aggressive on FMCG inorganic. Company has done well in terms of all those 3-4 acquisitions they have done, and they have the distribution also. So I would expect ITC to do more inorganic in FMCG, and that is where I think the huge re-rating has happened as a sector, and ITC has not participated till now. So we expect more upside in ITC in the next 4 to 5 months perspective.
Interesting. I'm going to quickly get on board Naresh Mirani as well. Naresh, this was your breakout candidate. The stock has already risen up 13% year to date. And look what's happening on ITC today. It's a 7% surge that you're seeing on ITC on the futures alone. Actually, more than that as I count now. 232 is what the stock is already nudging. What next?
So I have we looked at the chart yesterday also, and I've been discussing it for the last couple of sessions. So if you look at ITC, one change which happened in the last 1 month and a half. Earlier the bottoms were around 200, so there are 8 bottoms around 200 between December to July, August. Last 2 times it went up to 215, 217, came back to 204. Now what is interesting is, so that is where it becomes a higher bottom. Now today's move is a breakout move. We've crossed that 217 to 220 mark. Your first target comes to around 240. Now 240 is a very interesting price point. So pre-COVID, the stock used to be, and before that big downtick back in January, the stock used to be around 240. Now 240 was a support level for a long period of time between 2017 to 2019 roughly, or for the whole of 2019. So once it crosses 240, that would be an indication that the long-term downtrend and the underperformance of ITC is changing. So for now, I would expect a move towards 240, and it could also be start of a much bigger move going forward, wherein it could well be starting a major trend change. Now why is it more interesting today is it's already done 3x to 4x the general daily volumes. Now if it ends up doing 5x to 10x volumes, that is what I expect today. So it could be a 5x volume day. Whenever we've seen a 5x volume jump up in a large cap, it's actually a start of a longer term bull market for the stock. So out here, a very simpler way to trade is to even look at a buy position here if one has a longer term view and accumulate all the way down to 220s. So 220, 230 becomes a buying zone, and a stop loss to be kept at 214 now. And expect a move wherein it could last next 6 to 12 months also. So I would wait for confirmation of 240.45 where to add more position, but as of now at 220, 230 it's an accumulate, and say it is a big price volume jump breakout today. So looks pretty promising. Finally maybe, and mind you, the stock used to be the largest weight in the Nifty back in 2013. So when the narrative changes, so the narrative was ESG, we've seen FII holding go down almost by 6 to 7% of equity over the last 6 years. That could be changing if we see the theme playing out in ESG. So overall, the stock is available at the same prices that it was in 2013. So I would be pretty hopeful on the stock, and the risk reward is good now because once the price breakout has happened. So accumulate at 220, 230, keep a stop loss at 214, and write it down for the next few months or even a couple of years.
All right. I do want to thank Abneesh, in fact, for joining in and for giving us the perspective on ITC. Thanks so much, Abneesh. Naresh, do stay with us. We're talking